JSE all share ending well into the green today, up almost 2%. This is despite the fact that we saw a weaker start on the Dow Jones. In the US, a lot of pressure coming through, and in Europe we saw a lot of bourses reversing gains as well.
European markets opened green this morning, not by very much. We were certainly the leader comparing to Western Europe. During the day, they kind of shifted down into red territory. We just carried on going, pretty much buying across the board. I think ArcelorMittal was the only of the top 40 stocks that were heading down, and some really big stocks really in the upside. Certainly strong buying coming through, strong volumes coming through. And if you look at the rand, the move in the rand and against the euro and the dollar, it looks like some foreigners returning. Last week it looked like they were rushing out. Looks like some of them are coming back today.
So I suppose it's safe to say that the risk aversion that we're going to be seeing, or that we have been seeing, is mostly towards the developed markets as opposed to the emerging markets, because we also saw the Shanghai Composite gaining incredible ground in today's session.
Yeah, absolutely, and that's largely been the story. You know, from the lows of March 09, we saw massive spikes up, but then when we sort of started to level off and the like, the focus moved to those developing markets, which includes South Africa, a whole bunch of us, but includes South Africa, and away from Western Europe, North America. The question was then, well, the issue then was, where's their growth going to come from? Now the sovereign debt is rearing its head, and that's creating some more worries in that space to add to where's the growth going to come from. So as soon as investors feel a little bit more confident, they do as they did today, they move into emerging markets and start buying.
Simon, I'm not sure if you picked this up, but interbank lending yields are gradually rising, looking at the Libor rates, and levels that we haven't seen since July 2009. Many are very concerned that we could see some kind of liquidity crisis coming to the fore once again. Do you think that the fact that we have seen those Libor rates rising, that it does show some kind of systemic risk bubbling under the surface?
Certainly it's showing that there's a fear of that risk. Whether it's real or not, time will tell. But that is the real risk. I mean, the crisis of 2008, more than anything, was the point that no one was lending to anybody. And government kept on pushing money into the system, but no one would lend it on. So we had absolutely a credit freeze, and that's the risk going forward. And then it was companies, large banks and the like, motor car manufacturers. Now it's sovereign risk people are worried about. My view, and it's a difficult call to make, obviously as time moves on will get easier. My view is that whilst the risks are there, I don't think we're going to get to the levels we saw back in late in 2008. Certainly the market is saying we're nervous in that space. I think so far they seem to be I think they're overreacting to a degree.
African Bank came out with results today. Headline earnings per share down by 2%. Eleni's division, though, headline earnings per share up by 6%. So a bit of a surprise there, because the company has been criticized quite a bit for the fact that they did acquire Eleni's. That stock ending the day at the 30 Rand level, up 3%. So markets and investors clearly liking this news.
The results were broadly good news. A dividend maintained, debt still rising, but seemingly seems to have leveled off. I heard the interview you had moments ago with the CEO. The debt level seems to have probably the worst is behind them in that sense. And Eleni's doing well for them. I was one of those who criticized the Eleni's deal. The comment there that they're probably two years behind where they would like to be. My point still goes back to Eleni's might now be making money. I like companies to stick to their knitting. And in the case of African Bank, their knitting is very simple. It's lending money. It's micro loans and the like. Eleni's is retail. It's a different kettle of fish.
Saga still playing out quite extensively for ArcelorMittal, and as you mentioned earlier, ArcelorMittal under pressure today, down by 1%. Kumba Iron Ore a gain of almost 2%. Simon, it's still something that investors are very concerned about.
Absolutely. I mean, what we have with ArcelorMittal is frankly is uncertainty. We keep on seeing sense announcements from one or two of the protagonists around this, and who's got that mining right for that 21.4% and the like. The real issue is the uncertainty, and worst case for ArcelorMittal is very, very bad, and best case I think we could probably say is very unlikely. So really the market is taking a dim view in it. And I mean, if you remember before the announcement, it was up around the 112s, 114s or even 120s. Really, really strong sell-off post that. Opened at 90, and the selling's been steady since then, losing another 11 Rand since.
Very quickly, MTN up almost 6% at 104 Rand. Clearly a lot of confidence coming through for the likes of MTN in today's session.
I think two things really driving it. One, strongly sold off, market really coming back, liking that value around the 105 level, and talks, rumours that they're going to be bidding for a license in Iraq. 14 other bidders, very competitive, but if they can get it, they've proved they can really do well in that space.
Simon, thank you so much for your time today. That was Simon Brown from Standard Bank's online share trading.